So it's been a tough first quarter for the first administration. It looks like things are not looking up, you know. Lots of news, lots of scary news out there. It's looking tough for everybody. I mean, year to date, the market's down 4%. At its worst, it was down almost in correction territory, down 10%. And in the last video, I said that the best thing that could happen is that some news comes out from the new administration that tanks the market. And it did, you know? I'm only down 0.47%. And this mainly happened because I was assigned on the $71 call that I presented last video. I sold everything I had in SPLG at $71, and the market sold off really heavy. But that doesn't explain why I'm only down 0.47%. It's because I suspected that news would come from the new administration that tanked the market. And how did I do that? I waited one day. One day's all it took. I made that video, February 2nd, I believe? And on February 3rd, bad news came out. I didn't sell. I didn't do anything the day I made the video. I waited. And people got really scared. And the day after that, I sold a put to buy 100 shares of SPLG at $68, and that just got assigned. So the news from the administration came out, you know, and I'm gonna ramble because I've had a few drinks, but it's almost a crystal ball moment, you know, to have made a video here between these 2 points, and then to notice that things were shifting around me. The sand is shifting, and to have sold a put way, way out of the money, and pick up a few hundred, 100 shares of SPLG at a very, very, very cheap price relative to what I was holding it at. Because while everyone else is down 8, 9%, I didn't get eviscerated like that. And this is where the outperformance will come from for this year. I'm nearly certain of it. I'm still up. I did add to the portfolio on the singular day that it was below 3%. I threw in $44. That's why right here it says total contribution 104. It's because I have $60 in a Roth IRA that I'm building in the background here just for fun. Just to buy some things that I think are fun and interesting to watch, things that I'm interested in. And I only had one day below the 3% mark where I can add other things because I essentially saw that new administration would cause uncertainty and capitalized on that. So the spread between me and the total of 1 year is less than 3%. It is looking great for the last 5 months to make up beta. I have been matching theta decay from a call, from theta income, from a put. I'm going to go back to selling calls. I'm going to go ahead and crystal ball it again. Here's the deal. March 21st expires today. I got assigned on this. That's fine. I'm going to be selling some pretty illiquid things, and I do not expect to recover the previous price within 27 days. So tomorrow, when I wake up, it'll be the Friday of a triple witching, and I will be selling right at what I bought for, or what I sold for last time. You know, if I bought it 68 and I sell it 71, you're buying low and selling high. We'll see how that turns out. If it doesn't go very well, I will adjust my strike price down. However, this 5% differential that I saved probably just saved the portfolio's performance for year one. Being fairly conservative, I sold the put on the idea that the new administration was likely to cause a market downturn. However, if within a few days the stock market kept grinding upwards, I should be able to resell the put with existing capital at a higher price. That would be good for me. With the contribution that I put in at the only time the portfolio was sub 3% when I could add a contribution, I bought raw SPLG shares, and those have since appreciated. So you take what you can get. And I have finally stopped dollar cost averaging into TLT. I have added significantly to the holdings, $1, strictly $1, just as a watch list. And there are a few companies in here that are fairly niche, that are not usually index followers, and there are some that are. So I believe that sometime in the near future I will come back with a big haha, I told you so face, and it'll be very fun for me and like the only other person that watches this. But this market downturn was not severe for me, and I have managed to pick up shares at a discount compared to all-time highs. And looking forward, I see a lot of the uncertainty going away as the new administration realizes that, uh, you know, rocking the cradle so hard that the baby falls out is not a great idea. And the stock market will decline some before it comes back to all-time highs. Could it go lower from here? Yes, absolutely. And I am incredibly long with the assignment of the 68 strike put on an index that follows American equities. However, given that I'm long at 68, I think that it'll be fine. And if it grinds lower, I will add to further positions. I'm long America still. You know, how 4 years can be a long time, but the outperformance is on a 10-year timeline. If I get a 3% return for a couple of years before they turn off the reward on Robinhood, then I will outperform given. So it is not a sad day for me. That being said, on a 3-month timeline, the S&P is down, what, 4.5? And on a 3-month timeline, I'm down, oh, wake up, 3.5. It's only 1% outperformance on a 3-month time scale, but the 1-month time scale would be dramatically different. I'm only down 4.5% ish. And the SPY, when it loads, the internet's so sad, is down 7 and some points. I think that we have a year queued up of great outperformance due to just one insightful decision that I made shortly after I uploaded the video. I don't think it'll be much more or less important than that one decision for this fiscal year for the portfolio.